This course is going to help you to become a pro in forex trading. Whether you're a beginner or you have been trading before but have not maximized profit in the forex trading market, we are going to help you to become a pro at the end of this course. This course is going to have series of videos, practical videos that is going to show you practically how to trade and earn money from the trading market. We are also going to be exposing some strategy techniques that will help you to maximize it. We're going to show you what brokers do that earn money from this market. So this video is good for you. Please kindly help us subscribe to the channel, like this video, and then we are going to continue. Now for this particular video is going to be only theory. All right, we are just going to be explaining everything you need to know about forex trading, and then we are also going to explain some strategies, to explain some terminologies, explain some things why the market behaves like this, so that in our subsequent videos you'll be able to understand. So it won't be a boring video and it won't be that long. All right, but in our subsequent videos, please check this channel for the next video. We are going to be giving you strategies, showing you from scratch how to install MT4, our strategies and all of that. So it's going to be a good ride. Please kindly follow us. We're also going to give you a certificate at the end of this course. So if you want a certificate, tell me in the comment section or contact me on WhatsApp. I will give you this course. Now before we begin, please, I would like to say this: taking course for taking a loan, for knowledge alone, does not profit you. When you hear us, if you hear this knowledge like this, you practice it, especially from the subsequent videos we are going to be showing practical. Please kindly practice them before you maximize from this market. So now let's go into the slide, and then I'm going to explain what forex trading is and all that you need to start this forex trading. Now you can see that this is a practical forex trading course from foundations to live trading. That is the course, and the foundation, this course is under the Express Tech Academy. That's why we say we are going to be giving you a certificate, right? So this is the first slide. This is module 1, and then we are going to be teaching forex fundamentals, everything you need to know. Now what is forex? All right, let's start from there. What is forex? Forex is the exchange of currencies in the global market. For example, I'm a Nigerian, and then let's say somebody from Ghana want to come to Nigeria and they want to translate the Ghana cedis to Nigeria in order for him to come and live here. Right, that exchange, that process where we exchange the Ghana cedis with Nigeria, is what we call forex trading, and then people do it in order to earn money from the trading market. You can see, so people trade USD, that is the dollar, to pounds and all of that, and earn money. All is live and it's with your phone, not even with your laptop. If you want to use your laptop, better, but your phone is what we are going to be using for this particular course. All right, so you can see what are the key points here. The forex trading market is the largest financial market in the world, where we exchange currency, and of course it opens 24 hours a day and only 5 days a week. It doesn't open on weekends. It only opens on Monday to Friday. All right, we have some indices or some pairs that open on weekends. All right, but we are going to be showing you that as we continue. But the forex market itself only opens from Monday to Friday, and then it's driven by supply and demand. All right, depends on the market. When somebody is demanding your currency, the more people are demanding your currency, the more things are happening in your country, the more that market is going to drive. All right, so that is that for that. And then the next slide is market size and liquidity. Market size is the overall size of the trading market, and the trading market has over 6 trillion dollars, $6 trillion traded daily. So people trade from this market, so you can't even finish the money from the market. People are harvesting a lot from here and you can't finish. So imagine people getting 6 trillion a day. So be part of this movement. All right, the liquidity is very high. All right, liquidity is, in terms of the market being liquid, all right, is very high. So you can get any amount of money you want from the market. Candlesticks can run as fast as you think. All right, so you can get money depending on what you want. Now the benefit is that you can use small spread to get maximum profit. You can use, let's say you just use 0.01, and then you can use 0.01 to get $100, $200 at once. Right, I know that these terminologies may be very difficult for you to understand, but please kindly follow. I'm going to be explaining everything. All right, so that's that. The market size is very, very high. Now spot versus futures versus CFDs. Spot market is the immediate currency exchange at the current price. All right, so now currently how much is dollar exchanging with pounds? How much is naira exchanging with dollar? You know, you can check all of that. As of today, I think naira is exchanging at 1,570 naira to a dollar. So that is the current, that particular price is what we call the spot market, what is happening in there in and now. So we have the future market, that is contracts to buy and sell. You can buy particular currency pairs, keep, and then make your money, just the way we do in crypto. All right, we also have CFDs and all of that. All right, now we have currency pairs. This is one of the most important aspects of this introduction part. All right, so we have the currency pairs like USD. Currency pairs are, let's say, if we are exchanging naira with Ghana cedis, like I've just been saying, so those that naira and Ghana cedis are pairs. If we are exchanging dollar with pounds, dollar and pounds are now pairs. All right, so that's what it is. So USD with other major currencies, for example, euro with USD, they are pairs. GBP, pounds with USD, they are pairs. All right, so the major pairs are the euro versus USD and GBP USD. That's the major pairs. The minor pair are any non-USD pairs with any other one. So if you pair, let's say, a USD pair with AU, that is a AUD card. All right, so all those ones are minor, but the major ones are the pounds. You know, all those market, the UK and the US, they control the market. All right, so their currency are always strong. And we also have the exotics, which exotics is when you match a good pair with underdeveloping pair. Nigeria is not a developed country, it's a developing country. So if naira was supposed to trade, you were supposed to pay naira with USD. That particular pair is an exotic because naira is weak and dollar is high. All right, you can see the explanation is very clear for you. If you have any question, please ask me in the comment section. I'll be able to explain for you. And now we have the base quote versus the base versus the quote. Now if we are exchanging USD with pounds, USD is the base quote, the pounds is the quote. Just look at it here. So the first currency in a pair is the base, and then the second one is the quote. All right, so it's as very simple as that. So if you're exchanging pounds with the dollar, pounds is the base, dollar is the quote. All right, so it's as simple as that. You will get to know most of these things when we do the practicals. I just want to use this video to explain everything for you to understand. All right, so if you don't understand it, please kindly watch the video again, and in the subsequent video you'll be able to understand when we are doing it practically. All right, so what is pip? Pip is a smaller unit of price movement when price move. All right, if price move from point A to point B, that point is what we call pip, and we are going to be calculating it because that's when we are going to be knowing how much we are going to be earning from the market. All right, so the lot size is the, let's say you want to go to the market now and you buy, how much is USD exchanging with pounds? That is the lot size we are using. All right, so you buy in lot sizes. All right, you buy the market in lot sizes. So, and the lot size depends on the money you have in your bank account. It depends on the money you have in your trading account. So we are going to be seeing everything practical. I just want to explain this, right? So the standard lot size is 1,000 units, mini lot size is 10,000 units, the micro lot size is 1,000 units. Sorry, 100,000 units for standard lot size. We're going to be seeing that the market participant, who are the people participating in the market? The bank, every bank participates in the financial market. We have central banks, in fact they are the one controlling the market. All right, we have hedge funds and institutions, corporations, retail traders like me and you. All right, so we are the one participating. So you see all these banks, they trade forex. That's where they get their profits from. A lot of people have been asking, how is bank getting their profit? You see, at the end of the year, they announced that they have $400 billion in profit, $1 trillion. How do they hire good traders to trade the market and get them? So they are also part of this market. All right, so the trading sections are the Tokyo sections, which is the early session moderate movement. All right, it opens at 1 a.m. in the night and closes at 10 a.m. in the morning. So the market opens at that's the only time you can trade the market. It doesn't open all the time. All right, so the London section is the high volume and it has high quality. It opens at 9 a.m. and closes at 6 p.m. All right, and this is the market that we will be trading, because I'm making this video from Nigeria and most of my audience are in Nigeria. But if you're in other parts of the country, you can also key into others. So you just know the time zone that fits you, and then you know the one that you'll be able to do. So this does not mean that the forex market will not be open by 8 o'clock. No, it will be open. But when things start going on, well for you is by 9 a.m. So I always suggest that before you start trading from this part of this dumb part of the world, please always start your trading from 9 o'clock. All right, so that's when things gets busy in the market and you get the right result. And we also have the New York, that's the US. It overlaps with London and it has 2 p.m. from 2 p.m. to 11 p.m. So you can see that this is the New York time. All right, because you know that New York time is different. Now I'm making this video by 8 p.m. Now in US, it's like a daytime in their own place. All right, you can see that. So that is that. Of course, the impact, you have the overlaps, the highest volatility and all of that. We are going to talk about this. So that was volume 1, talking about the fundamentals of Forex trading. Now let's go to module 2, what we'll be talking about. And the module 2 is brokers. Who are the people who are the brokerages? All right, so the platform and the others. Now choosing a broker. So before you choose a broker, you must understand something. A broker must meet the requirements that you need. All right, so we are trading market. The market is open. People are there who trade, like the financial market, the institution we have seen. But other people who are there who are in the middle of you and the market. So they help you. So you register with them and then you trade, and then when you get your money, they are the one that will get you the profit. Now if you lost, they are the one that will get the money. So those people are the brokers. All right, so we have a lot of brokers like the Octa Forex, we have the Octa Forex, the Hot Forex, and we have a lot of them. We have a lot of them. So I'm going to be recommending one for you, and I'm going to be putting the link to that particular broker in my video description. So if you subscribe with it, if you register with it, it's completely free, right? If you register with it, they are going to give you some commission when you make your first deposit to start trading. So that is, I'm going to put the name, and I'm also going to display the name of the broker in my computer so that you can see it. I'm also going to put it in the video description. So a forex broker is a company that gives traders access to the currency market. I just explained it. So people are always there to help you gain this asset, and if you make money, they are the one to give you the money. If you lost the money, they are the one to get the money. All right, so what are the key factors? The key factors here are the spreads and commission. All right, lower cost mean more profit. All right, and regulation, they are being regulated. I don't want to go more into this. I just want to give you an introductory part. You will see more practically when we continue. All right, so how will you choose a broker? Choose a broker that have fast order execution and reduces price delays. And then of course you're also going to choose a broker that is very good. Now the broker I'm giving you is SNES. SNES is one of the best broker. Now if you place a withdrawal on SNES, let's say you traded and you get like, let's say $100 and you want to withdraw it immediately, it doesn't take up to an hour before your money is delivered to you. The same with other ones, but some other brokers will take time, because let me tell you the truth, there's no broker that wants you to succeed. So this is the bitter truth that they don't tell you, but I'm going to be telling you in subsequent of this guy. So they want you to fail, but I'm here to make you succeed. All right, so some of them will not actually help you. They will be sending you emails telling you they are here to guide you, but if you lost, they are the one getting your money. So if you lost and somebody is getting your money, why would they want you to succeed? So the brokers are there to make their money, and you're also there to make your money. So if you are very intelligent and you are very, you know the tactics you are using here, you're going to beat them. All right, we have been making money from there. All right, so so use the link on my video description in order to get some commission from SNES. So, and they also have a good customer support, so if you have any issue, they respond to you immediately. Like I've used other ones I don't want to mention because I'm not demarket. I don't want to demarket anyone. All right, so they are very good in terms of customer support. So we have account types like the standard account, the mini and micro account, and then we have the demo account. Now the demo account is the account we are going to be using right from the next video. In the next video, we are going to be installing MT4, and we are going to be starting trading live, start to trade live. All right, and we are on trade on demo. Now demo is you trade on demo, and let me tell you, 80% of what happens on demo can happen on live. So if you can trade on demo very well, you can be able to trade live. So please pay attention to the lecture we are going to be teaching, because we are going to be using demo account, and you are going to also be opening your own demo account from the next class to start this particular course. All right, so it's virtual money. So if you open a demo account, they're going to give you like $100,000. It's demo, it's virtual, you can't withdraw it, but you use it to trade. And when you master the market, you can now deposit like, let's say $10, $20, and try for yourself. All right, so that is that. And of course, we have leverage and margin basis. Leverage is the borrowed capital that lets you control the larger position. All right, so if you are using one lot size, if you are using just, well, let's say one leverage, it gives you an average leverage to trade over 100. So it's just like you carrying 100 naira in naira to the market and then buy something of 1,000 naira. So what gives you that leverage? The broker also gives you the leverage. We have leverage of 1,000, 1,2, 1,5 and all of that. So the higher the leverage, the higher the liquidity of the market, or the higher the money you will make. But you also have to know that the higher the leverage, if you are losing, the higher you will lose. So it's just a two-way thing. All right, so the margin is the deposit required to open and hold a leverage trade. So that's the margin. So if you have, let's say, $100 in your account and you are risking $10, that $10 become your margin. All right, so the margin call, then the risk is how much the high profit potential and high risk. So before you place a trade, we are going to be calculating how much you likely lose in that trade, and how much you are willing to lose in that trade, and how much you want to gain from that trade. So we are going to be doing all of that when we are talking about risk management, and when we are also talking about pips and lot sizes. So just follow us step by step. It's going to be an exciting moment for you. All right, so please, if you are getting value from this video, please kindly help me like this video. Thank you so much. Now the other types, we have the market order, which is the buy and sell in instant. You can buy and sell instantly, or you can buy and keep. All right, you can just put a stop order or a sell order, so that when price gets to this place, after you have analyzed your market, when price gets to this particular place, it should activate the sell. When price gets to this particular place, it should activate the order for you. Or you don't want to buy immediately, let's say you just say by December dollar will rise. So you just set it up, by December, let dollar start rising. And if dollar start rising by the accurate prediction you make, you're going to start making money. So all those things are the market order. Either we have the sell order or the buy order. So whether you are selling or you are buying. And what you need to know about in the forex market is that whether you are buying or you are selling, you are making money. That's the truth about it. Whether you are selling or you are buying, you are making money. So it just depends on good prediction and good analysis, which is very, very important. All right, so that is that. And then of course we have the trailing. So those are the most important thing I need to say on that. And then on the demo account, we are going to create a demo account in the next video, and then we are going to start it. Demo account, again, you can place as many, some brokers can give you, some of the demo account can give you 10,000 and some can give you 100. It just depends on the app you install and depending on your phone. All right, so that's that. All right, so we are going to be doing practical. See, this course is completely practical. There's no theory in this course, please. There's no theory at all in this course. So please kindly follow us step by step while we continue. All right, so now module 3 is the technical analysis. This is where the real deal is. This is where, if we ever get money from the forex market, this is what you need to understand, and this is what we'll be focusing on, the technical analysis. So you need to analyze. See, forex trading is like Bet Naija. I don't do Bet Naija, or I don't bet, but I have friends who bet, and they usually tell you that before they place a bet on any match, they will check the antecedent, what happened in the past. Let's say Chelsea and Liverpool now, they will tell you Chelsea have missed Liverpool 10 times, Chelsea win them 7 times. That shows that Chelsea have higher strength than them, and then they will go and place Chelsea to win, and then Chelsea will win. It's as very simple as that. So in the technical analysis, you know what has happened in the market before and predicting what will happen next. It's very simple, and we are going to show you that with the chart pattern step by step. You're going to like that. All right, so now let's look at what we'll learn on this module 3. We are going to learn line charts, we are going to learn bar charts, we are going to learn candlestick, but our major focus is going to be candlestick. So we are going to be showing you how to use candlestick to analyze the market. You're also going to learn what is bullish candle and what is bearish candle. Now let me just give you a brief overview. Now bullish candle is when when the market is going up is bullish, when it's coming down is bearish. Now when it's coming down is sell, when it's going up is buy. So we are going to be seeing all of that as well. So just follow us step by step. Of course, we are going to see some key patterns like reversal, continuation. I'm going to be showing you every of this, the flag, the pennant, all these things are things I'm going to be showing you practically in the subsequent videos. Please kindly help me, support me by liking and subscribing to this channel. All right. So all these things are just things we will learn in this. Now, support and resistance is a strategy you use in getting money from the market. So you know where price usually come and resist, and then you know where price will resist and go up, and all these things. When we get there, you really enjoy it. You really enjoy it. It's something that is very, very fascinating. It's something that when you keep doing it, you will like it. It's just with your phone. You just analyze it, draw here. I'm going to be teaching you everything completely. So, and if you master support and resistance, man, you have mastered the market. I'm telling you the truth. This is one of my best strategies in getting money from the market. All right. So if once you understand support and resistance, you understand. So when price gets to support, you buy. When you sell. When support gets to resistance, you buy. So if you have to know this, you'll be able to know how to navigate the market. So you also know the tools you are going to be using, the trend lines, channels, parallel trend lines, and all of that. We are going to be seeing everything step by step. All right. So we're also going to look at chart time frames. All right. I'm going to teach you here what we call top-down analysis. In this top-down analysis, it's a strategy as well that will help you to win from the market. So we're going to teach you how the market behaves when it's in 1 minute, the chart behaves when it's in 1 minute, how the chart behaves when it's in 5 minutes, in 15 minutes, and all of that, all the different time frames. And the medium time like 1 hour, 4 hours, long time like daily, weekly, and all of that. So we are going to be doing all of that in this particular course. All you have to do for me, please kindly stay with us and obey instructions. Like if you are my student, you must practice. All right, it's not just to hear me talk, you must practice. All right, I'm somebody who likes practice, guys, and this video is I've just been talking. I know you are getting it, but it's becoming boring to me. You know why? Because I like practical. I like showing you what I'm doing. All right, but this is what you get in the next video, so don't miss it. All right, so popular indicators. Moving average is also a strategy to win from the market. We are going to teach you how the moving average move, and then we also have the RSI, which is the relative strength index of the market. We are also going to show you what it means. All right, so we have all of these bonds and all of that. All right, so we have advanced tools like Fibonacci retracement. Of course, I'm going to teach even if I don't teach this first one, I'm going to teach Fibonacci replacement. Sorry. I'm going to teach Fibonacci replacement because it's a strategy that is very good. And of course, if you know these pullback levels like 23.6, 38.2, and 16, if you master them very well, it's a strategy you can also use from the market. Now, there are a lot of strategy to gain from the market. Fibonacci is a different strategy. Support and resistance is a different strategy. Top-down analysis is a different strategy. They are all different. But in the course of this class, I'm going to teach you the one that is best. And you also are going to pick the one that is good. I'm going to teach you all, but I'm going to tell you the one I use. And you're also going to see the one that is best for you. All right. So we are going to do practicals by doing all of these. We are going to mark all these things and all of that. And then module 4 is talking about the trading strategies. All right, like I've been mentioning, we have different trading strategies. All right, so the scalping. All right, scalping is like the strategy types are: number one, scalping. Scalping are people who trade, like the person who taught me Forex. All right, he goes to the office like normal somebody waking up and going to the office. So he goes to the office by 8 o'clock and then prepare his chart and start his trading by 9 or 10, and then by 5 o'clock he's coming back home like a normal person going to work. Those people are scalpers. They trade the market and open their market, and when the market is going on, let's say they open it by 10, they are watching it, maybe in the next 1 hour or 30 minutes or 2 hours, they cash out, and then they analyze again, place another one. So in the space of that full day, they can place like 3-4 trades and go. Sometimes if they don't see any opening, they place only one. Some days they can't even open. If they don't see any, they go back. All right, those people are called scalpers. While we also have what we call the day trader. Day traders are people who open their trade and they won't actually get the money from there, but they will allow the trade to run for a whole day before they now get their profit. So their chart will either hit their support line, or they hit their stop loss or take profit in the whole of the day. All right, and there are some people who mark some trade and hold it for weeks. for months. Those who are called the swing traders, they hold it for weeks and for months. All right, we also have what we call the position traders. This one hold them for like 6 months, 1 year, 2 years. All right, I heard of a blind forex trader who hold his trade for 4 years, and at the end of 4 years he became a billionaire in dollars. I don't know how he actually did that, but because I heard that he was blind and he actually did forex trading, so that was very mad. All right, so at the end of this course, you should be able to know, are you going to be somebody who trades every day and gets the money and then day trading? Now, of course, you know, whoever teaches you forex, you tend to emulate the person. So I'm a scalper because the person who taught me is a scalper. I trade my forex in a day, I will withdraw my money and go. I don't hold trades for long. So, but there are people who are there who hold trades for long. All right, so although the more longer it is, the more chances that you hit big money. All right, but you can also hit big money in the scalping way. All right, so those are the strategies. All right, you can see that the disadvantages and the advantages of this is that the scalping is fast for profit but very stressful, and the day trading is very active and very time consuming. The swing traders are balanced, less screen time. You don't have to be seeing the screen all the time. And the positions trading has less stress but requires patience. You have to wait for it. Imagine you holding a trade for like a year. It requires patience, right? And then the strategy components are entry points. Now, entry point is when you are entering the market. All right, the stop loss is where you want the market to stop. All right, so let's say you predict that dollar will go high into naira, for example, by December, and it will go high by December 25, and it will start dropping. It will go high for the first 1 week, and after that 1 week it will come back again. Now that coming back, you have to place it that, okay, if you put the particular day that this is when you know that this dollar, it will rise to this point to come back, that place, that's where you take your profit, and that's where we have the take profit. And then when, okay, if the dollar did not go high and it's coming down, all right, so if it did not go your direction and it's coming down, it should not over eat your money, it should not over consume your money. So you put a stop loss below the price. If you are putting it up, that should take profit up, price is going up. So if it did not go up and it's going down, there's a place you put that it should stop my losses, right? Because the thing is that if you predict the market to go up and the market did not go up, all right, and it start going down, you are going to lose. So you are going so instead of you gaining, you are losing. So it's just that's why I said it's basically on technical analysis. You have to predict very well. All right, so but that's what we are going to be teaching you. This is just theory. I don't even know if you understand any, but I know that I'm trying my best. But then the practical aspect is what I actually want you to be part of. All right, so the risk reward ratio, we are going to be talking about all of this and that. All right, so the combining analysis approaches is we have to use, now forex trading is divided into 3. The first part is the technical analysis, where that has to do with charts. All right, you have to be analyzing charts and all of that to get your market, which everybody does. Then the second aspect is the fundamental analysis. The fundamental analysis has to do with the news. All right, so if you analyze your chart and say dollar is going to go high, so and then you notice in US that there is an earthquake in US, there is an economic breakdown in US, something just happened in US. So let me tell you, the forex market is controlled by things that happen in the country. So if there is political riots, that means the market is not going to do well. If there's anything going wrong in that country, the market is not going to do well. That's why you need to understand fundamental analysis. So if you predict that the market is going to go high on the dollar, and you notice that there is political riots in US or the economy is falling, it means that that chart is not going to go up, it's going to fall, because the market will not go up, because those indices will bring down the market. All right, so that's why before you succeed in this forex trading, you need to combine the news market, and then you also combine the technical analysis. You combine it. So if you notice that, okay, the US economy is doing well, the dollar is going up, and then you come to your chart, you analyze, and it's giving you a bullish, that shows that the market will favor you. And if you pay attention to the news properly, and you notice that the market is not doing well in US, you check their indices, check their news outlets, you discover the market is not. If you make your chart, you always notice that, see, what happens in the chart is what is happening live in those countries. So it's not that charts are different things. Charts are graphical representation of the current financial situation in that country. So that's why you need to pay attention. All right. So I will also be giving some of the news, the website where you'll be getting news. So you read those news every day before you analyze your market. So combine the fundamental analysis and then combine it, all right, together. So we are going to be teaching everything as well. And then the third aspect of forex trading is what we call the sentimental analysis. The sentimental analysis has to do with your sentiment. All right. So, you know, let's say you see a bullish candle now and you say, I want this market to go up. I want is my personal opinion. You are sentimentally determining what will happen, not using the indices that is supposed, the fact that is supposed to be used. So because you want to earn money, you want the market to go up. So, you know, sometimes those who make bets because they want Chelsea to win, they will go and place Chelsea to win. Even if Chelsea does not have enough players, even if Chelsea does not have the strategy, even if Chelsea have been winning, because they are Chelsea fans and they want Chelsea to win, they go and place Chelsea to win, and then Chelsea will lose. Why? Because Chelsea does not have the requirement. So that because you want the market to go high does not mean that the market will go high. So if you want the market to go and you go ahead to place the market on bullish, that means that you are using your sentiment and you are going to lose. So you need to study the sentimental analysis, the fundamental analysis, and as well the technical analysis. And of course, that is when we are going to be covering all the three aspects in this particular video. Of course, you see that I'm giving you a lot of value. Please kindly help me subscribe to this channel and like this video. Now, building a strategy is you defining the rules. All right, know when to start, at a stop loss, take profit, always add a stop loss and take profit. We'll show you how to add all of that in a practical video. And then of course, to apply money management skill knowledge, we're also going to apply that with this called risk management. It's a separate topic. All right, you can also back test and then all of that. So back testing is test your rules on historical charts. All right, so just testing to see how these things are going. We're also going to be talking about that. So we are going to be doing practicals. Man, I love practicals. All right, I so much love practicals. Like I said again, risk management is a complete topics because you need to know how to manage your risk. I know that I've promised a lot of you that the top 10 best students will get funding from me. All right, if you are taking this video and you think that you are good at it, send me a DM showing me charts of what you have done after the end of the course, not after this video, after the end of the course, and then I will see how you are doing. I'll mentor you, I'll put you on the watch list, and when you are doing well, I can be able to fund you. Now, if you are supposed to fund your account with your money, you really know what it means by loss. If you lost money, you know what it means. All right, so that's why I always, in that risk management, I will teach you, don't borrow to trade. Don't borrow to trade. Right? So some people call trading gambling, but it's not gambling. I do not call it gambling. People call it gambling, but it has to do with the brain. All right, it has to do with you sitting down and learn. All right. So before I learned forex trading, in fact, I was going for forex trading classes and coming back, and then every day I come back, I will ensure that number one, I go on YouTube and then I will search for the videos on that topic and watch at least 2 to 3 videos on what my boss taught me. And then if I go to class, I'll be bubbling. You see, so you have to follow me step by step. So the risk management is protecting your trading capital, all right, ensuring that you don't lose, because the market can eat your money very fast. Like I said again, the brokers does not want you to succeed. We as the tutors, we are the only people that want you to succeed. The brokers are also there to make their money. You're also there to make their money. You make your money. But can I tell you the truth? You can make your money and make them lose. And that's if you follow our instructions. All right. So what are the core risk concepts or risk per trade, all these things we are going to do them, all these are calculations. We are going to calculate how you are going to be losing all this money, so you don't have any problem to worry. All right, so you can scale out and you can scale in and all of that. So you can see that this is looking very, very good. So if you have a $100 account, I'm going to be giving you the lot size you're supposed to use to maximize risk, so that you don't bring in greed and blow in your money. All right, so what are the key takeaways? The key takeaways is that never risk more than you can afford to lose. All right, so there are a lot of things I'm going to teach under risk management, so you just follow me. Risk management is not going to be that practical, because I'm going to be revealing knowledge, I'm going to be revealing keys. So I'm also going to be making as a video like this in a slide presentation, but I'm also going to be showing you how to calculate your risk and all of that. But other videos, Alright, section of fundamental analysis and sentimental analysis and risk management. Other videos will be pure practicals, analyzing charts, everything. Alright, just follow us. So we're going to be doing, so it's never risk more than you can afford, so you know how much you are willing to risk. So if you have $10, for example, $10 is too small, so you need to know that per trade you should not lose more than at least $1. All right, so that you can be able to trade other ones. All right, so that you don't leave your market to the open and your dollar is just wiping. Well, no. All right, so we have also risk management keeps you in the game for a long time. So they see there are many other things that I'm going to be teaching you. All right, so the learning objective is that you should be able to design your own money management plan to protect capital while achieving the target returns during this course. And then the practical aspect, we are going to be doing everything that has to do it. Now module 6 is fundamental analysis and what are the macro drivers, who are the movers and shakers of the market. All right, so that is that. All right, so what is fundamental analysis? The study of the economic, political and financial factors that move currencies. Whatever is happening in that country affects currency. So you need to study. You wake up every day. See, sometimes these days you just wake up and see that Boko Haram bomb in Borno. It does not concern you. This time around it will concern you. You just wake up one day and hear that somebody died in US and the US economy is upside down. You will say, what concerns me? If you're in forex trading, it will concern you. Right? No, not that it will concern you more, but you will need to know. Right? If you don't know, you can just predict your chart and say it's going up, and then you don't know that the economy is saying a different thing. Fundamental is also to help traders to understand why markets move. Right? So that market is moving up is showing you that the market is doing well in US. If you're trading on the USD pair, it shows you that the market is doing well in US. So if the US economy is booming, their currency will be going up. So if you place a buy, you'll be earning your money. If the US economy is not doing good, all right, so you need to place a sell depending on your analysis, because the market will be coming down. So fundamental analysis helps you to do that together with the technical analysis. All right, so the key economy indicators are the GDP. Each country has their GDP, gross domestic product, what moves the market. All right, we also have the consumer price index, which is the CPI, and we also have the unemployment rate. The more unemployment the economy is, the weaker the economy. The higher the employment rate, the higher the economy, the stronger the economy of the country. All right, so we also have the interest rate and all these things. So all these things are things we will talk about, but it makes no sense to just keep talking, right? All right, so now the central bank policy and rate expectation. Central banks set interest rate. All right, most of these hedge funds, brokers, they also influence the market in some way. All right, like I said, they are part of the financial market, so sometimes they influence the market. All right, so you need to learn some of these things. All right, you can use the economic calendar to predict all of these things, to show data, as you can interpret news and event risk management. So know what the news is saying, and all these are things I've been saying, so I don't need to be reading them for you. All right, so we have the market correlation and safe havens. All right, interest rate and all of this. All these things are good. Takeaways: fundamental explain currency movements beyond charts. All right, it explains why currency moves beyond just you analyzing charts. I'm going to be showing you everything about charts. You don't have to problem with that. All right, so we move to the rest. We are going to be doing practicals where I'm going to be sending you some books, some PDFs that will also help you to support these videos we are making. I'm going to be sending you some of these important books that I've been using that helps me both in the fundamental analysis, the technical analysis, and of course in the sentimental analysis that will help you. And then lastly, the module 7, which has to do with the trading psychology. Now, trading has to do with 80% of the brain, the mind. So everything is in your head. Please, you have to know this. Trading has to do with 80% of your mindset. 80%. 20% strategy, analyzing charts, knowing what is going on, but it's 80% mindset. So we are going to teach you some psychology, why things move the way they do, how you should handle them, they are very good. Please, at this point, I need to beg you, if you are liking this video, you are doing me a favor. If you love what I'm giving you, please kindly drop me a comment and thank me and appreciate me. The YouTube will help me to promote this video if you do, and it will also help me. I'm giving this course completely for free, so why not you help me? So thank you for helping me liking and subscribing. It doesn't take data at all. Right now, let's close it. So psychology matters very well because it contributes. Now, one thing you need to know about psychology is that Forex has to do with emotions. Now, like I said again, if you put your own money in the market, like $100, see, you'll be seeing your money like this as it's going. You'll be seeing it if you don't do the right thing. And then if you are doing the right thing, you'll be seeing your money as it's rising and you'll be happy. But if your money is showing red, you know that things not red, right? So you know that you'll be losing. And then you begin to feel that it's just like you losing your money. When you lost your money, you will not see your money going. You just automatically just lost it. And at the moment you discover that you lost it, you feel it and you allow it go. But just look at when you are seeing like somebody is killing your neighbor or somebody is killing your loved one and he's there, you can't help. It's another kind of thing. You are seeing somebody killing your wife, you can't help. That's what Forex is. So it has to do with more of emotions. So how do you control most of those emotions? How do you put your place in order and maximize all of this? That's why stop loss and the take profit is very important. We're going to be telling you how to set all of them. So you need to discipline yourself. Here I'm going to give you more than 10 tips, 10 strategies, 10 things you need to know in the psychology aspect of making your trades look good. All right, sorry, making profit with your trades, and then you get less distance. So common cognitive bases are the confirmation bias. So you have to wait for some trades to confirm before. See, let me tell you, I know that most of you want a get quick scheme stuff. I don't really recommend that. There's no skill in Express Tech Academy that I always recommend that is get rich quick skill. No, always take your time. So I can tell you that please use about 1 month, 2 months, 3 months to learn Forex trading before you start trading live. Learn the demo. Don't rush. Because I analyze good trades for you and I show you how to do technical analysis, you just start. You just immediately start. You get from the demo, you start getting profit. You think that when you go live, you get profit. No. You have to master the market, master some psychology, master some strategies first before you go live. All right. So of course, you can confirm the market. Always be patient. Now, I said that it's 80%, Forex is 80% mindset, but I also can tell you that Forex Forex trading is 80% patience. You have to be patient. A trade may not be going your direction. It may be going against you. But if you are patient enough, it may reverse and follow your direction. So you have to be patient as well. All these things are things I'll be explaining details in the course of this video. All right, so you have to also conquer greed. Right, you have to conquer greed. It's not a get rich quick scheme. All right, don't come here and say you want to make $1,000 in one day. I don't coach people like that. I don't mentor people like that. All right, so you have to reduce your greed. The market is always open, but your money is not always open. Your money is always going. That's what you need to know. So I'm telling you some of these harsh truths because I will not be impressing you if I'm telling you that you have to earn $10,000 from Forex trading in one day. I won't do that for you. But if you follow what I'm giving, you can earn that. It's possible. All right. So you can see that you can manage your greed. All right. Manage your greed. So if there's a strategy I'm going to give you that this is what you're going to do per day. And once you get that limit, there's money you are going to be getting per day from the market. And once you get that money, leave the market. And if you don't follow my instructions, if you come to my DM, I will not answer you. That's the truth. So you must follow my instruction because I have the experience. I know what the market can do to you if you are not doing the right things. All right. So that's that and that. And so you can build discipline. Very, very important. You can journals. You can keep some of the trading journals, and then you can manage your stress and all of that. So you can metrics to monitor. You can win the win rate. How many trades do you win? One of the students private chatted me that he used to trade crypto and he used to get 70 to 80% of his trade. I don't know how true is that, but then that's somebody who knows his winning rate. So if I ask you, if you place trade like up to 10, what is your win rate? All right. So if you follow these things, you will know. So you have to monitor your metrics, the risk reward management, the expectancy, and the drop down. All right, so that's that. The psychology is the biggest factor. All these things are just now. So a student ask if we will be able to, like, they're always asking if we'll be able to teach how to trade forex with AI. Of course, you know that AI is not the order of the day, right? So because AI is the order of the day, so we have what we call bot. So you can use a bot, and even when you are not on it, bot will be able to trade for you. We have that, but of course you know that bot will cost you a lot. Will cost you not a lot, but a little. But if AI can trade for you, but you need to understand that AI is not 100% correct, but AI can do you good. Alright, so we're also going to integrate that in this course and then teach you how to use AI. But then we are not going to teach you, how to use AI to gain $10,000 in a day. We are only going to teach you the basics about AI. All right, so that is setting your trades on automation. All right, and then, like, again, we are going to be giving you all of this. We are going to be giving you some books. All right, so please anticipate our next video, and then when we begin, we are going to be showing you everything step by step. I believe you follow me from the beginning to this end. It means that you are ready to learn. So let's go in and make that money. But before we go in, please kindly help me subscribe to the channel, like my video, and then it will help me to go a long way to continue to give you this value. God bless you.